Welcome to MoneyWeek's Roundup of the week's events. The government is reportedly considering capping the prices of basic staple foods in an attempt to bring down inflation. But is this a good idea? Other countries, notably France, have introduced the same policy, although there's little evidence to show it'll be a success. In fact, the UK has tried this before. In 1972, Edward Heath's Conservative government tried to cap the price of food, but this was a complete flop. The rate of inflation doubled and remained high for a decade. The policy ultimately cost the government the next election. Economists believe this policy is also unlikely to work this time around. Price controls tend to lead to less competition and can push up the costs of other goods as companies try to recoup lost profits from capped prices. That said, caps are not always bad. Energy price caps across Europe have protected consumers over the past year from sky-high energy prices. Still, with the UK food chain already under pressure due to labour shortages, increased production costs and post-Brexit legislation, more government red tape could be a disaster for the industry, leading to higher food prices in the long term, even if it might give consumers a helping hand today. Artificial intelligence has the power to change the world, and this is especially apparent in the healthcare sector. AI is being used to develop drugs and identify diseases at an early stage. When combined with other technologies, AI enables doctors to do more with less. One of the most exciting companies in this space is Illumina. The company recently announced a new AI algorithm that has the potential to identify disease-causing genetic mutations in patients with unprecedented accuracy. Meanwhile, Siemens Healthineers recently announced a new imaging technology which will help radiologists identify smaller structures, predominantly tumours, enabling them to administer treatment at a much earlier stage. Finally, there's Intuitive Surgical. The company combines AI and automation in its robotic surgery systems. London has bounced back since the pandemic. Workers are returning to the capital and demand for office space is high, especially in the West End. The capital's largest listed landlords are already benefiting from this, and yet shares in these companies are trading at huge discounts to the value of their property. Great Portland Estates and Derwent London are two examples of this. Both landlords are trading at discounts of 40% or more to the value of their property assets. That's despite their huge plans for growth in the coming years. They're also tapping into the green economy. Both are experts in reducing buildings' carbon footprints and refurbishing existing buildings instead of constructing new ones, reducing carbon emissions associated with construction.